Wonderful morning to everyone here on this call. My name is Victor Ambolari, and I'm going to be your host today for the market review where we make money daily. Um, I think Happy New Year is in order from my own end. I'm sure you received it a lot even from my other colleagues. So this is from me this morning. Happy New Year to everyone. So last year was good, and even though it was a bit bumpy towards the end of the year, with the US elections and all. This year, also, very, very sure it's also going to be better than last year due to a number of factors. So as they come, we are going to be unfolding them. So I'm sure everyone can hear me. I just need more persons on this call before we actually start the analysis. So just a few more minutes. Few more minutes, then we are going to officially kick off the review. All right. Thank you so much for joining this morning. All right, good morning once again. Um, so I think we should just start the review right now because we're waiting for others to join the call before. So I think it's time to start now. Thank you for your patience. So this today, rather, we're just looking at how to maximize the possible opportunities in the market. Um, so it's my intention to just show you possible ways to identify when the market is possibly good enough for you to enter the market, all right? To transact either for a buy or for a sell. So let's start with, okay, this is here's JPY on a 15 minutes. Excuse me. All right, so this is USDJPY on a 1 hour time frame. Now, so I'll just show you, let's say just two different strategies in case there is a need to go for more. Now, what I want to do is I just don't want to say, oh, this is USDJPY, all right, you're buying or you're selling, or this is Euro USD, this is gold, because I know that is what you guys want. I know that is what most of you want, but you would not be a good trader like that. What if Rally Trade does not give you or does not tell you what to buy, what to sell? Meanwhile, we are going to be on this call for max 1 hour. What if opportunity comes up and we are not in a live analysis like this? So how do you, is it that you're going to pass up that opportunity? So my goal is to just show you how to identify opportunities so that you can maximize those opportunities yourself, all right? So let's do it this way. So let's say on any chart, right? On any given chart. Now it is, let me just put it out there first of all that you cannot get this 100%. Nothing is 100% in this market. Nothing is 100%. So you are just trying to increase your win rates. So before I just say this, please, can everyone hear me? If you can hear me, can you just please let me know? Either an emoji or you let me know by yes, you can hear me. Just type a yes on the chat. I think it's just one person that can hear me. Okay, two persons. Okay. All right. Thank you so much. Thank you. Thank you. So let's proceed. So how do I look at my chart sometimes? So when I have, for instance, I'm sure we've done this analysis. We did it like 2, 3 months ago, 2 months ago, thereabout, almost 3 months ago. But most of you were not on that particular call. So it's something you know before, but let me just teach you how to practically use it. Practically use it now, right? Simple step. The first one is your moving averages, right? And here on my chart, I have my 21 and 50 moving average. I have my 21 moving average, which is my red line, and I have my 50 period moving average also, which is my green line. Now, this moving average serves as support and resistance depending on which direction price is at the moment. So if price is above, it serves as support, and if price is below, it serves as resistance. So what you do is you wait for price to do a break either above or below. So for instance, let's consider this level. So all you need is two candles breaking either side of the moving average. So previously price was up, price came down. I need 1 and 2. So two candles breaking below my moving average. So this is the first and this is the second. So I have two bearish candles. I have two bearish candles that broke my moving average to the downside. Now, this is your break is going to be on 1 hour time frame. So after I see price breaking below my moving average, Then you immediately switch to your 15 minutes time frame, 15 minutes. And here I have where I marked price breaking below moving average. So this is how it looks like on 15 minutes. Now, your job is on your 15 minutes is where you're going to enter the market for a sell. But you don't enter a sell until price goes back to hit your moving average on your 15 minutes time frame. You don't just switch to 15 minutes that you enter a sell at this level. No, you don't enter a sell because this was when you switch to your 15 minutes. You wait for price to retrace back to moving average before you enter a sell. Price retraced very close, but this was where we had a hit. So this is where you would have been selling from. All right. You'd have placed yourself from this level. Now, I think you can see that price gave some significant pips, 96 pips, almost 100 pips, which is very significant, depending on your lot size. Even if you're using 0.01, you should be able to get some good profit from this level, right? So you get some good profit from this level. Now, price retraced back, which is fine. If you haven't closed your trade, your profit then reduced until it almost becomes zero. So for instance, on your 15 minutes time frame, price has broken above your moving average, right? What you do, you will notice this is that level on your 15 minutes time frame. Price broke above your moving average at this level. So you might be scared, oh, let me get out of this trade. The only condition for you to get out of the trade should be when price breaks above your moving average on your 1 hour. So I switch back to my 1 hour. You notice that on my 1 hour, what happens? This is my 1 hour. On my 15 minutes, around here, price has broken above. But you notice on my 1 hour, price is still below my moving average. And the moment price got to my moving average, what happened? It served as resistance and pushed price back to the downside, right? So 1 hour is going to help you know when to get out. So, but for instance, then you have something like this happening now, that on your 1 hour time frame, price has successfully broken above moving average again. This is when you exit your trade for a sell. You exit your trade for a sell now. And what are you going to be looking out for right now? Now, price has broken above your moving average again, right? And you have two candles break above. Two candles breaking above, 1 and 2. Then you switch to your 15 minutes time frame now, right? Okay, so you are going to be for a buy. Remember, we're going to be entering a buy around this level. Immediately price retrace back to moving average on your 15 minutes, okay? Now, price on 15 minutes has broken below moving average, isn't it? But remember what we said, on your 1 hour time frame, except price successfully breaks below your moving average on 1 hour time frame, that is when you close your trade. So hence, what I do is if I enter my trade, my stop loss is usually a few pips below my 1 hour time frame moving average. So if you look at something like this, you still see that price has not yet hit your stop loss, although you are still in drawdown, but it's not that far from your entry point. Okay, so this is a very, very simple strategy. Hence, you know what to look for. And for some persons I've shown this strategy, to be honest with you, they've been doing very well. Okay, it requires some level of patience, but that patience will definitely pay off. Okay, it will definitely pay off. So hence, just put your trade, put your stop loss, and just forget about it. I mean, forget about it. Yes, that's what I mean. Literally forget about it. I should increase my volume. Okay, let me try. Sorry, my voice is a bit, when I say my voice is a bit under the weather. Okay.
So can you explain it again?
All right, I will. Okay, so let me explain it again. Perhaps I should use another chart this time around. Or let me use another chart this time around. Now, remember I said it's not 100%, but when you find the one that actually works, you stand a chance to make more profit. Hence, it now depends on how much you would maximize the trade. So let's go back. Let's say at the point here, let's use the latest drop, the latest drop. So price broke below my moving averages here. This is NZD USD. The moving average, they are exponential. My moving averages are exponential. Someone is asking. So you see, this is my 50. 50 is, you see them exponential. That's the method, exponential, right? Then my 21 also is exponential. Now, mostly some persons will do 21 exponential, then 50 are simple. 50 can still remain simple like this, all right? It's almost still the same thing, all right? It's almost still the same thing. Okay, so, but I use exponential, exponential. The difference between the simple and exponential is when you have a kind of massive movement in price. For instance, where price was going to the upside and I have this massive drop, my chart, my moving average will bend quickly. It will respond quickly to that change in price direction. But if it is simple, simple will not respond that quickly, right? So that's why I use exponential. So that's the answer to your question. Hence, so I have a break, 1, 2 candles to the downside. Third, right? So you see from this level to this level, these two bearish candles. Now, remember the next step, what you are doing, you look at the market from your 1 hour time frame. You are looking at your market from the 1 hour time frame with your moving average. The moment you find a break of moving average, all right, a breakout to the downside or to the upside. So in this case, to the downside, that is when two candles, please don't forget, that is when you switch to your 15 minutes time frame. Yeah. So on my 15 minutes time frame, you could see this was where price was. Now, remember, you wait for price to go back to moving average before you initiate your sell trade. Before you initiate your sell trade. So this was when we have a hit at the moving average. So around this level here, you would have entered your sell trade. Okay. So any drawdown, some profits came around this level. So price is still struggling around this level right here. Okay. So in this case now, I think probably price is still break even because you notice that it's back to our entry point. So I'm expecting that continuous drop in price. Now, where do I set my stop? Where do I set my stop? I'm back on my 1 hour until price breaks above my 1 hour moving average. I'm still good. All right. I'm still good. So this is where I'll probably have my stop loss, right? So my stop loss will just be, depending on how your chart looks. So from here to my stop loss, you have, this is barely giving me just some few pips as my stop loss, right? So if price continues to dip, then that is when you're going to be in some massive profit. It's a very simple strategy, but remember it requires patience, all right? It requires patience. Now, like I said, it's not 100%. So how does this work? From my experience, right? Let's say I use this strategy and within a week, I was able to get like, let's say 12 to 15 trades thereabouts. Let's say 10 to 15 trades between that. So if I have, let's say 10 trades, for instance, most likely I might not have all the 10 going exactly the way I want them to go. I might have just like say 3 goes back and hit my stop loss. 4, highest is 5 goes back to hit my stop loss, but I'll still be profitable, right? Because I'll allow my trade to run. I will allow my trade to run. So for instance, if this guy is going to drop, hope you know that you see some level of drops again. You can see some level of drops. I want to see how it will drop. Now, this is how I approach my trade. When I'm in profit, right? It even happened to me this morning on GBP JPY. So let's say this guy begins to drop, and I'm here. I'm in profit at this level right here. So what I'll do is, you see this my stop loss. I'll move my stop loss from where it is right now. I'll bring it to where my entry point was, where I entered the trade from. But usually I put it just slightly above my entry point. So that in case price decides, if my profit decides to start going back again, price decides to retrace, if it gets to my entry point, it takes me out of the market. I will not be taken out in a loss. Instead, I'll be taken out in just very small profits, very small profits. So that is how I manage my trades, right? So for instance, here's my GBP so that's how you really, really manage your trade and become so very profitable in the market. So enter this trade, I think around this level right here. Okay, no, I enter this trade around this level right here. Okay, now because of this particular level, so for those who understand supply demand or order block trading strategy, you know that this is an order block. So that's why I entered the particular trade. And after this guy came down, retraced, entered some profits, came back again, entered the trade again. Now, the moment I was already in some good profit, instead of me to close my profit, what I did was, when I entered here, I had my stop loss below this level right here. So the moment I was now in profit at this point here, I just moved my stop loss to my break even, to where my entry point was. So you can see that this candle, in fact, it happened just recently, just before I started this review. This is the candle that just took me out, but it took me out in just little profit. Okay. Meanwhile, I had 3 positions. I've closed the highest one. So I still have some good profit. I had 3 positions. I had 3 trades running. In fact, the highest lot size was the one I closed. So I left the 2 smaller lot size, which is 0.05 and 0.1. I had 0.15, 0.1, then 0.05. So basically, all my trade closed and I'm still profitable. So if you can manage your trade that way, you will definitely have a positive P&L, that is profit and loss, irrespective of whatever the market does. Okay. So this is that simple strategy that you can use. So for today, I'm just showing you that particular strategy. Please, are you guys understanding? Do you guys understand what I just said, rather? Is it clear enough? I need your responses, please. Is it clear enough? If it is, type yes. If it's not, just say no.
It's not really clear.
Oh, yes, no, it's not too clear.
Yes, sir. The part I don't understand is that you see, you count 2 candles
Okay.
when he's sell, when he starts selling, then you go to 15 minutes or what? I didn't really get that part. Can you explain that part?
Okay, let me use this Euro USD as an example. This is Euro USD now. I do this more on currencies, right? I do this strategy more on currency. So I noticed that price broke below my 2 moving averages. I need 2 candles. 2 candles. So some persons can say 1, 2, but these were the ones 1 and 2 that broke below my moving average. 1 and 2. I need 2 candles breaking below. And if in the case of breaking above, I need 2. So you can say 1 and 2. 1 and 2. All right. So you just need 2 candles to clearly break below, to clearly break out of your moving average. But you still don't know how to make, wow, I'm going to need some training on that. So hence, I have 1 and 2. Meanwhile, in addition to this particular strategy, in context, let me just show you in context. There are times you know if this will most likely turn out good or not. And how do you know? The kind of candle that breaks either above or below your moving average tells you that holds a lot of secrets. So for instance, all of the candlesticks we have, so we can have like doji candlestick, we can have like a hammer, an inverted hammer, we can have like a bullish engulfing, bearish engulfing, maribozu, shooting star, and all of them. Now, all these candlestick patterns are categorized into just three different kind of candles. Now, the first one I usually say is what we call an indecisive candle. Let me just show you this so that you understand better. An indecisive candle is that candle that the body of the candle itself, that means either this red or the green part, covers less than 50% of the entire range. By entire range, I mean this is the high of this candle and this is the low. So if I mark the high, and I mark the low, right here, you find out that inside of this range, the body itself covers less than 50%. Okay, so this kind of candles, we call them indecisive candles. It means that even if it is a bullish candle or a bearish, so for instance, this is a bearish candle, but sellers were not able to really take full control of the market. Yes, you can tell that, okay, perhaps it's just like watching a football match and your opponent wins, but they won by, let's say, an own goal or a late penalty. It's not like they deserved that win. They were just fortunate. So it's not clear that sellers actually took full control of the market, okay? So this is indecisive candle. Meanwhile, the other kind of candle is that kind of candle that the body covers at least up to 50%. So you can see this candle, for instance, considering the low and the high, the body covers at least 50%. Right? You can say it covers at least 50%. So candles like this are called decisive candles. It means that buyers actually took control. Or in the case of a bearish candle, you just say sellers actually took control of the market. Okay, so that is the candlestick. Then the last one is an explosive candle. An explosive candle. So you can see this massive candle like this. The body of this candle should cover at least 70% or more. You can see the body of this candle covers at least 70% or more if you include the high and the low. So this is a convincing candle, explosive. Buyers were dominant in the market. So this is what I would like to see. It's preferable if the candles are either explosive that broke, for instance, breaking below my moving average. I have a candle like this, or like this, or like this. Explosive candle, right? Breaking my moving average. It shows strong momentum that sellers are pushing price to the downside. So I have this break, so I can say 1 and 2. Some person can say 1 and 2, but convincingly I have 1 and 2. So if I do this like this, 1 and 2, then I switch to my 15 minutes. So what time frame? The time frame you are using is 1 hour time frame. Remember, if you know what, at the end of this session, just go back to this video so you watch it again from beginning to end. It's on YouTube. It's recorded live. So just go back to YouTube. You will find this video. Watch them again. You will understand clearly how I approach the market. So the first step is your 1 hour time frame is what you look out for. Your 1 hour time frame with your moving average 21 and 50. Second step is the moment you have a break, either above or below. So in this case, below, you need 2 candles to actually break below, right? Clearly below. So I have 1 and 2. Then you switch to your 15 minutes time frame. So on your 15 minutes time frame now, you wait for price to go back to moving average. So in this case, the moment price can go back to moving average, in this case, this was where price hit the moving average. This is where you enter your sell trade. You enter your sell trade, all right? Good. So I have my sell trade at this point here. Then where do you set your stop loss? So for those who you are very busy, you can't monitor your trade. So remember, this is where I have my sell trade, right? Your stop loss is going to be just few pips above your moving average. That's it. It means that if you are saying on 15 minutes after you've entered the market, in this instance, price, was giving you negative drawdown, and it looks like it's breaking above moving average. But remember, it can go above your moving average on 15 minutes, but your 1 hour is going to help bring price back to the downside. Okay. All right. So that's why you usually put your stop loss few pips above your moving average. This is not too much. It's just because it's 15 minutes time frame. So you can see that price actually returned, and now you are in some profit. Okay. You are in some profit. Now, in case you are scared that your profit will just automatically disappear, you see this your stop loss, you can move it to your slightly above your entry point. That's it. It means that even if this trade reverses, goes back against you, it won't take you in negative anymore because you're already in profit. Okay. So that's because you don't want to close your trade. You are actually trying to trail it, right? If my profit grows, let's say my profit grows and my profit comes to like this level and some significant profit, you can simply just move your stop loss to secure some of your profits. This is how you do manual trading stop. You are trading your trade, right, manually. So you are trying to secure some profit in case price goes back against you. So you can manage your trade this way, all right? So I hope you clearly understand this one now. So just go back to this video and you actually understand. So this is for currencies this morning. So let's look at how do I approach other instruments. Let's say something like gold. How do I approach gold in terms of trading? There are a number of strategies, but usually it depends for me. It depends on how the chart looks like, right? Depends on how the chart looks like. So what I want to do, the first thing is I want to look at my higher time frame, my 4-hour time frame. My 4-hour time frame should be able to tell me if price is actually moving to the upside or moving to the downside. So if I zoom out a bit again, you see that at this instance or during this period, let me go back. During this period, sorry. Price was clearly moving to the upside. So you can see that your moving average on your much higher time frame with instruments like this helps you to filter out. So you notice that price remained above your moving average for a long time, for weeks, 1 week, 2 weeks, 3 weeks before price broke to the downside. Then the moment price broke again to the upside, you spent 1 week, 2 weeks, 3 weeks, 4 weeks price broke again to the downside. This is a 4-hour time frame. So from here to here is 1 week. Right now, the moment price broke above again, he spent 1 week, 2 weeks, 3 weeks before price breaking back to the downside. So if you notice this, what do you think? Most times when price breaks to the upside, it spends at least an average of 3 weeks before it breaks back to the downside. That's just something I noticed on the pattern here, right? Now, price broke to the downside and it spent 1 week, 2 weeks, broke back to the upside here, just spent 1 week, broke back to the downside. Now, if you notice from this point here, okay, price was ranging around this point, so it doesn't count. I don't want price to range. I want price to actually trend. Ranging market is very dangerous, all right? It's very dangerous. So right now, price is even not really clear, but price is now back above my moving average. So I'm banking on my moving average to actually do the job for me. And if price retraces back to it, so for instance, if price comes to my moving averages, I am looking at buying this guy. It is still my 21 and 50 moving average. 21 and 50 moving average. 21 and 50. Now, this is how it looks like on my 1 hour. This is how it looks like on my 1 hour time frame. Right? Good. So my 4 hours helps me to filter it out, but my 1 hour is now helping to guide my trade. So I need price to move below my moving average. Meanwhile, there are some other things that you need to consider while trying to trade some of these things. I noticed that at least for the last few weeks or few months, gold tries to respect certain levels, which is, um, let me use this to show you. Let me use this to show you. So I have something like this, which I use to mark out my significant levels. I mark out my significant levels. Okay. So you have your daily highs, your daily lows. Okay. Let me not confuse you. Let me just change this back. So let me do it manually. So for instance, you see this low point here, this low level here, okay? Then this is like the recent high point. Recent high, recent low before price start moving in either direction. Now remember, price is not actually clearly moving in a particular direction yet. It is still chopping inside and outside of our moving averages. Chopping inside and outside. So for instance, here it remained above moving average for let's say first day, no, let me just say one complete day, and by the following day back below moving average, stayed for one day, the following day. It's not staying above or below moving average for too long, right? Price is not staying above or below moving averages for too long. So I don't want to see when price is clearly above moving average or clearly below moving average and is respecting it. Now, please, I need everyone to mute, everyone to remain mute. Everyone to remain mute.
Black tó wà ń bẹ̀rẹ̀. Tó wà ń ta AK wẹ̀rẹ̀.
Okay. Sorry about that. So on gold, I usually try to consider my recent or last week's high and my last week's low, right? Your recent high and your recent lows, right? So this is a high point and this is a low point. Hence, you notice that the moment price came back to this high point this week, this was for last week. Today is Wednesday. Yesterday was Tuesday, and the first day was Monday. So this is a new week. So this was the highest point of last week, right? Then this was the lowest point for last week. So it's the lowest point for last week, right? So what I'm doing is that I will be confident taking trades. If price can go to my highest point of last week, I'll be looking out for sell. And if price can come all the way down to my lowest point of last week, I'll be looking out for some buy trades. Okay, so gold can be very crazily volatile right now. Price can automatically change directions, especially when you have fundamentals. So for today, we are looking at the ADP non-farm employment change and unemployment claims around 2:15 and 2:30 p.m. today. Then FOMC minutes meeting also today. So by night, price is going to be crazily volatile, like sincerely crazily volatile. So you can understand why price can just automatically shift direction. So for me, there's no clear-cut direction right now. I'm still looking at the possibility of price pushing down. In fact, breaking below this moving average, right? I'm expecting, I'll be looking out for buys if price can come to this level. And worst case scenario, I'll be looking out for more buys if price can come all the way to this particular level right here. So that strategy of moving average where you look out for a break above or below, for now, when price is choppy like this on your gold, please do not use that strategy. Do not use that strategy. You might be having more like winning trade, losing trade, winning trade, losing trade. It's just be too many. So you need to filter it out. So that's why you apply it more on currencies right now, right? You apply more on currencies right now. And what I'm doing on gold right now, I'm looking out for price to move to an extreme point, right? Either move to the high. You could see the moment it got to this high, price started to dip. Then the moment price, I'm expecting if it can come to this low, I'll buy. And if it doesn't buy all the way to this low, then I'll start buying. So if I lose it here, I'm going to make it back from here. Meanwhile, if it starts buying from this point here, just know that it has a long way to go. So you are going to be maximizing some profits. this is the kind of trade where I have multiple positions, like I did on my GBP JPY. I think I've been trading this guy since Friday. The moment price started pulling up, Friday, traded it, then entered again on Monday, then entered again yesterday, which I left till this morning, right? So because price has been on the downside, this is the trade. So from Friday, Monday, Tuesday, oh no, okay, yeah, Friday, Monday, Tuesday, and today, Wednesday. So I started buying this guy around this level right here because I know it has a long way to go before it can get to the high again, all right? So, and you can see that it got very close, retraced, right? It has not even gotten fully to that particular level. So if it happens again like that on gold, I'm going to be buying this guy aggressively, right? I'm going to be buying it aggressively. So for now, I'm still hoping that price should come back to the downside. Still looking at more for themselves. So let's look at D40. Okay. Oh, sorry. Some of these indices. So we are still in January. Price is not yet 100% balanced yet. So you can see some crazy movements either ways of your charts. So for indices or for commodities and indices generally, I like looking at my chart from the much higher time frame. Let me clear out all of these things first. From a much higher time frame. So I like starting from my 4 hours. And on my 4 hours, mostly I am trying to mark out my significant levels, right? My significant levels. So if you go to your 4 hours, you will see that this is a support level. This was a break of my support, but still came back again, all right? So I can just still have price here because price can still decide to come to this point here, okay? Then for my resistance levels, I had a resistance at this point before price broke above the resistance. And finally, I have this resistance right here, which price has tested, right? Price has tested that resistance point. So this is now my lower time frame, which is 1 hour. So guys, what do you think? What do you think is most likely going to happen on your D40? Should I be expecting price to pull up or should I be expecting price to go down? It's an open question.
Down.
Price go down.
Okay, who else?
Price should
Who
go
else?
down. Price should go down.
Go down. Okay, good. So
Price will go down.
now, for our trade management, where do you think your stop loss will be? There's no how you want to do it that your stop loss will still not be above this level.
Above the first break point.
There's no how you do it that your stop loss will still not be around that level, right? So, in other words, so you know the direction that we're expecting price to go for at least the next few days. Worst case scenario, it can run down very fast and do it today. So price can come to this level here and stop, retrace back all of a sudden. But if price can get to this point here, this previous resistance here, I will stop buying. Sorry, I'll stop selling rather. I will stop selling. I want to see if this place will push it back. And if it comes all the way inside, I want to see if it can come here for me to start buying. And worst case scenario, come here for me to start aggressively buying it and buying D40 again. So for now, your indices are just trying to respect the major areas, major zones, right? Major zones. And it's worth noting also that these guys are mostly in an uptrend. Mostly in an uptrend, right? Mostly in an uptrend. Okay, so you have something. So there are times where if it fits, I can actually have my trend line, you know, to support my trade. But for now, trend line is not going to really do us any good. It's not really going to do us any good. So this is what I'm expecting for our D40 for today and US 100 also. Let me see. Okay, these were my previous points of looking at entering the market. Let me take this out and start this analysis. Okay, no, still good. I can just leave it here. Now, remember my 4-hour time frame. I will do this for indices. I will do this on my 4-hour time frame. I'll do it on my 4-hour time frame. I don't mark my major zones just on my 1 hour. I mark them on my 4-hour time frame. So let's go. I have this point here. So you can see I'm looking for a point where I can have clearly support or resistance levels. Let me take these ones out first. Okay, let's go again. So I clearly have this level right here as my support level. Yeah, that's one. Then I have, okay. So in between, I think I have a very wide range. I have a wide range. Something, excuse me. So I have a wide range right here. But on these are your external points. I'm sure if I switch to my 1 hour, I'll have some internal support and resistance also. Yeah. So more like in between levels. Okay, my in between levels. So you can see something like this. Let me take this out. So let's say current market price. You notice that this level first was serving as resistance. At some point, resist.
Those are your stops. Those are what's going on. You just stop.
Sorry about that. My internet just went off. I had to switch. Okay. Yeah, Dennis, I'm back. Sorry about that. Right. So I'm sure everyone can hear me. Can you hear me again? Can everyone hear me?
Yes, I can hear you. I can hear you.
All right, thank you. All right, thank you so much. So you can see this particular level here. Let me change this color to like maroon. So internally, price is taking this level as my resistance point. When it was coming to the downside, you notice that it first of all struggled here, bounced off, broke below, used my previous support now as resistance, broke above, and is tearing back inside. So majorly, this is serving like the middle point. And if you extend it further backward, you'll see how it aligns, right? You'll see how price just aligns. And if you extend it backward, you notice that it also aligns with this particular level. But let's just focus on current market price and what price is most likely trying to do. So from my own perspective, you would see I would want price to come to the extreme point. So for instance, it's not far from the downside. So the price can come to this level, majorly because I have a kind of order block around here. Okay, that's another strategy for another day. I don't really want to go into detail. But if price can come somewhat down here, then you'll be looking at buying this guy. But if I'm buying US 100, I want to be careful because these points might actually bring price up and can actually bring it back to the downside. Okay, so this is like an intermediate point. But if price can in future break above this level, again, let's say it breaks above, then you just wait for a retest. If it retests and it holds, and you see some bullish momentum, then you buy and continue to the upside. Okay. So for now, most likely price should still turn downwards. Looking for what we call some liquidity in order to fuel the upward movement at all. So I'm still looking at price doing a little push down before that massive push up that we are all expecting. So you can decide to trade the sell, but if you are doing that, please always have your stop loss, right? Always have it. Meanwhile, your stop loss in this case is going to be wide, except you want to risk it. So, but if price can get to this level, guys, we are watching this guy use 100, then we're going to be buying it aggressively. Okay, there are times where you know when to enter the market aggressively, and times when you know when to just be conservative, just have like one or two positions and just see if it goes really like that. But there are times when your level of confidence is so high, cases like that, I have multiple positions with even higher lot size, multiple positions. So in case I see price starts to struggle, I close out some. Right? I close out some of it in profits, especially higher lot size. Then I leave the rest, but I move my stops to my break even. In case you want to come back down, okay, it's fine. You know, so that's how I manage my trade. So any other instrument here? Any other one to analyze? What I've showed you, I'm sure the strategy we've talked about, I think some of you got it. And for those who did not, please head back to this video on YouTube at Rally Trade. You'll see this video and just watch this video again to give you more understanding, right? To give you more understanding, let's see. Euro USD and USD card. You'll find it on the video. You'll find it in the video, rather. Sorry about it. You'll find it in the video. So that I will not waste much time at all, right? I think I talked about those guys to an extent. So let me just do oil and we call it a day. So let's do oil and we call it a day. So this is oil. For the last few, should I say few days now or so, oil has been pushing up after some massive range. Still by 4-hour time frame. After some massive range, oil started to push up. But in that push up, let's see, there are some major key levels that price is expected to find challenging. So we were having a good support level here. Price created a good support level from this level, actually, from this level, the whole of this range, right? So price was giving us some good support at this level first. Now, and at the same time, price was also giving us some resistance at this level too. Okay, at this particular level also was giving us some resistance. Now, you can clearly see that price has taken out our resistance, retested, and it is still going to the upside. So what are the odds? For me, I think if all things being equal, price should continue that movement up until at least this level. At least inside of this zone. here. So if you look at it on my lower time frame, if I look at it on my lower time frame, I will see that price still has some room to go before we can now see maybe some range or a retracement again back to the downside. Right. So for me, oil is still very much bullish. We just need to find some good entry points, but oil is still very, very bullish. So thank you very much for your time this morning. Wish you a very, very peaceful day. Looking forward to seeing you in more of our training. So we are going to be communicating some of the events we are going to be having, especially for the remaining part of this month to you before the end of this week. So by next week, fully, we can start doing some wonderful things in the market, so to say. All right. Thank you so much. Enjoy the rest of your day.